The halving is coming. You may have heard this in the Bitcoin community in the last few weeks, if not months. But what is actually the halving? What implications does it have for you? And why should you know about it? We're going to tackle all of these questions in this video today. First off, what is the halving? The halving is actually an event that takes place roughly every 4 years, or every 210,000 blocks to be exact, and it simply reduces the block reward miners get in half, hence the name halving or halvening, depending which side of the world you're on. So far, we've already had a few halvings. Back when Satoshi still used to participate in the network and mine, there used to be a 50 Bitcoin block reward. That got reduced with the first halving down to 25. The next one took place, that reduced it down to 12.25. In 2020, we did see the reduction from 12.25 to 6.25. And now the upcoming one will reduce it from 6.25 down to 3.125 Bitcoin per block reward. You might wonder how it works, because after all, Bitcoin is a decentralized network and it's not like all miners meet and agree to do a halving. No, obviously not. The halving is actually programmed into Bitcoin's code. As I've mentioned, 210,000 blocks is the number where every halving takes place, and this helps in actually reducing inflation a significant amount with each halving, and therefore also having a set monetary policy for the entire network until the last Bitcoin in the world is mined. In the past, the halving has been significant for the ecosystem, not only because miners actually have to adapt and rearrange their business strategy and their long-term planning because they're gonna reduce half of their rewards, but it's also been significant for the Bitcoin price. Many in the community believe that there's this halving cycle where, because the halvings takes place and we've always seen a price increase with new all-time high after the halving or during the whole process of this halving taking place, they believe that we've found a 4-year recurrent pattern that actually proves that the halving is there with a supply shock where fewer people can actually purchase Bitcoin daily. Because of our scarcity, we know that if it's more likely that people want to buy Bitcoin and the demand outweighs the supply, we'll obviously get a price increase, therefore squeezing mostly after the halving the whole market up, driving up, having new all-time high, and everyone happy in the process. Okay, let's talk a bit about implications, because as I previously mentioned, the most immediate effect is obviously for miners. Historically speaking, as I've said previously, they have to adapt their business strategies and they long-term planning to actually adapt to this event. But such an interest in the halving, which is predominantly now also driven by the media, also has other implications. If more people are aware of Bitcoin and they know that this halving takes place, roughly there's always a price spike, or it has always been a price spike in the past, they will come in, obviously spend more time, invest their time, potentially also invest some of their funds into Bitcoin, and therefore participating in the network. And so far, we've always seen an increase in user adoption and user numbers correlated with all the halvings. Therefore, we can also say that the halvings are very much a significant event for user adoption in the Bitcoin ecosystem. So what do you need to know if you are in the Bitcoin ecosystems and the halving takes place? Mainly there are two things. A, the block rewards get reduced. There is going to be a supply shock. People are more interested at that point in time about Bitcoin. And on the other end, this can lead to high volatility, obviously to an increased demand by other fellow investors, and this could potentially lead to longer explanations, longer time spent between friends and family to actually teach them about the halving. But the more people we get on board, the better, because at the end of the day, they will discover Bitcoin. For miners, this period means reassessing their mining operations, seeing what they do, what they will do into the next couple of months, and also what kind of changes it has to their economic models, as it's a given fact into the future until the last Bitcoin is mined that these things will take place and always be there. And that's the end of the video. If you liked what you've seen and you found this video informative, please give it a thumbs up, subscribe for more content like this, and also if you have feedback, suggestions, or just comments, let us know below. We're always happy to hear your feedback.